What's going on, everyone? Today we are going to be talking about Bitcoin because Bitcoin is down 2.2% at 76K, and it actually just recently reached 75K, which is significant support for us. So we're going to talk about this because we have gotten rejected off a significant resistance area at 79.5K, and now we're hitting the support of 75K. So what is going to happen next? Remember, I'm not a financial advisor. None of this is financial advice, but let's get straight into it. So we're going to hop straight into this technical analysis, and then we're going to talk about some other things here on Bitcoin. So as you can see here, this is the GDP growth rate that's happening today and the core PCE price index that's happening today. And then we had the Fed interest rate decision that happened yesterday. We'll talk about that in a second here. But looking at the technicals here, we did just now touch this support area. And look, the reason being this is support here. We've used it there as support. We've used it as resistance here. There is a little bit of support here. And then you can see that we've hit this level multiple times. We hit it back here inside of April of 2025. And then we hit it again, more than likely, all the way back here, almost back here on March to February of 2024. We almost touched it. So this 75K range is a really important area that you cannot forget to look at. I've actually recently taken all of my levels off here. As you can see, we don't see all the white lines that you usually see on my chart. For the people that are new to the channel, you probably haven't seen this before, but I always have all these white lines on the chart because I call that micro and macro resistance and support lines, right? The macro resistance, the macro supports, those are going to be your Fibonacci retracements. The micro ones are just these little areas that you stop at in between each Fibonacci, because you notice that we actually hit these levels multiple times. Like if we look over here at 71K, this is another level right here where we had a double top on the 20th of May and the 20th or in the 6th of June of 2024. We had a double top here. As you can see, boom, 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 boom. And then we kept going through the bull flag. So as you can see here, double tops are bearish signals. But the reason why I'm mentioning this is just because this is a micro resistance area. As you can see here, used as resistance, used as resistance, used as resistance, used as resistance, and plenty more times. Which the reason why I need to tell you guys that now is because what are we doing right now? We are literally bouncing off a micro support area. So as we're bouncing off that support area, this could give us some more momentum to push back up to 80K. Now I'm a bear. I'm bearish right now. All right. Because I think I believe, not even I believe, I know we're in a bear market, right? We're in a bear market right now for Bitcoin, right? The stock market is reaching all-time highs. I was actually just day trading that. And Bitcoin is inside of a bear market, right? Crypto is in a bear market. Remember, there's always the crypto seasons. There's the crypto bear market, and then there's the bull market. The bear market lasts about a year. The bull market can last about 3 to 4 years, right? And this particular bull market was from January 1st, 2023, all the way to October of 2025, because that is where we peaked, and then we just started to dump. So all of 2023, all of 2024, and almost all of 2025. So it's like 2 3/4 of a year. So that's pretty good. That's pretty good. Now we're gonna also look at this resistance here because, like I mentioned, I think that we could bounce off of there, and it does look like that might be what's happening. This guy Ted says Bitcoin tapped the 75K zone and is now having a bounce back. Buyers are defending the 75K level, which is a sign that another short-term rally in Bitcoin could happen. Yes, it is. So it is a support area, and it does look like buyers are keeping that defended. So all the way up to 80K, we got to watch that again. I know we just hit it twice here, which we also hit that for a double top. If you come over here on the 30-minute chart, you can see that is actually it would look a lot better on the 2-hour chart. So this is a clear case of a double top. So we hit a double top right here. Boom, boom. And then you can also say head and shoulders, right? You can say head and shoulders and double top. So if you look here, bearish double top, bearish head and shoulders pattern. So we have both of those patterns. And something about pattern trading, like you only really know the pattern after it's happened, right? I don't know the phrase people say like hindsight is 2020 or something like that. I don't know. But you really only know the pattern after the pattern happens. And if you can catch it while it's in the pattern, you are in a golden zone, right? So I didn't notice the double top until it got rejected right here and then came down to about here. And then I'm like, okay, that was a double top, right? You don't know the double tops. But when we're in bear flags, you know what we're in. When we're in bull flags, you know what we're in the whole time. So if you look at where we are now on the daily chart, we're still in a bear flag. So I'm still gonna be bearish since we're still in a bear flag. And the reason why the candlesticks look so weird is because I had VWAP on. And if anybody doesn't know, and you're gonna do day trading, like let's say you're day trading stock options or day trading crypto or something. I know I'm going off topic real quick, but using VWAP is actually a really good way of doing it. That's just how I was doing it just now. But back on to topic, we are inside of an interesting range here for Bitcoin. The reason why I said that is because we're bouncing off the 75K range, going up to 80K. And then, like I was mentioning before, we're still trading within a bear flag. If you know your patterns while it's in the pattern, you're in a golden zone, right? Whereas something like a double top, it has to happen for it to actually be real, right? Like, for instance, like when you're looking at these patterns here, these patterns kind of suck, right? Like the double top, the head and shoulders, you only know those after you went through them. The double bottom, the bullish inverted head and shoulders. But these type of patterns, rising wedges, right? The bearish rising wedge, the falling wedge, the expanding triangle, the bullish expanding triangle, the bearish expanding triangle. These are the type of patterns that help you actually track your trades. Like you can actually track where it's going, whereas something like a head and shoulders or a bearish double top or double bottom, like you can't really track that. Like you can only see what's happening after it's happened. But like an ascending triangle, descending triangle, symmetrical triangle, falling wedge, rising wedge, these ones as it's happening. And on top of that, divergence, these as it's happening. Bearish divergence, bullish divergence. What type of divergence do we have currently, right? So if you look over here at the MACD on the daily chart, you can see we have higher lows on the MACD. And what is that? We come over here and look at that higher lows on the MACD, bullish divergence, and lower lows on the chart. But we don't have lower lows on the chart, only higher lows on the MACD. We're actually getting higher highs. So if you spin it another way and you look at this and we're like, well, these highs on the MACD are also lower right here. You can spin it a whole different way and say, now we have lower highs on the MACD, right? And what happens when you have lower highs and higher highs, right? You have lower highs on the MACD, higher highs on the charts, bearish divergence. So if we look at it from that perspective, then actually we have bearish divergence. I know we just came off of a sell-off here, and now it looks like it's going up, but no, it looks like we actually do have bearish divergence building up. So as you've seen there, lower highs on the MACD and then higher highs here on the charts. So that is literally key for bearish divergence. So I think we are building that bearish divergence. We're hitting the support. We might bounce up to 80K. That's going to be a very significant range for us. If you look at the percent R trend exhaustion, we are literally going up on the long-term trend here, which is the blue line that I just marked. And then the white line here is the short-term trend. And usually what happens here is this: if the short-term trend comes down to the long-term trend, then that just means pull back now, we're dumping, right? So for instance, if this something like this starts to happen and we see this breaking and going down to 71K, pullback zone, we're dumping and then we're trying to recover. And then after that, we either go all the way down or keep going after that. So what would happen there is something like this. We try to recover. If we can't recover, we get rejected and then we continue downwards. If not, we try to continue upwards. I think more likely we continue downwards from there though. But yep, I'm still bearish here. There's people inside the comments that were saying before that I was completely wrong about the 80K resistance, about the bear flag that we're in. It's very clear that we're in a bear flag. But the bear flags aren't always going to be bearish, right? Sometimes they can break out to the upside. Literally with every pattern, none of them are 100%, right? But we just had this financial news yesterday, which kind of skewed in the direction of the markets a lot, actually. And that was the Federal Reserve having the meeting. So I talked to ChatGPT. I told him, hey, give me the interest rate decision from yesterday, the GDP growth rate, and core PCE info for today, right? So yesterday, the Fed's decision, they held rates unchanged at 3.5%, to 3.75%. So they held it and they paused rates, right? Highly split, most divided since 1992. That's what they said. Signal no urgency to cut. Inflation still above target, which is not good. Internal disagreement and policy uncertainty elevated because with Jerome Powell leaving, that's going to be pretty bad. Market implication: rate cuts pushed out, higher for longer, bias strengthening. And then you have the GDP growth rate for today, and the growth is at 2% annualized versus expectations of 2.3%. So we're slightly below what we thought our GDP would be, right? Our GDP growth rate. We're slightly below it by 0.3%. So that's not good. Drivers, government spending rebound. Obviously, government is spending a lot of money on war. So we're losing money because of the war. Well, we as the people are losing money. They, as the government and the in the companies, they're making money, right? But we ain't gonna talk about that. All right. Takeaway: growth positive but not strong. Quality of growth seen as not durable. So it's not that bad, right? It's not that bad. Is pretty much what they're saying, but it's bad, but it's not that bad, right? It's doable. That's why you didn't see things completely dumping off the info, actually, which is good. And then the core PCE inflation was that just came out today. The core PCE plus 0.3%. Core PCE, that was month over month, year over year, 3.2%. All right. So that's what we're seeing there. So this is information that is, pretty good. And I just told ChatGPT, hey, is it bullish or bearish? ChatGPT said slightly bearish overall, mixed signals. So it is slightly bearish. It's not that bad. All right. It's not that bad. So I'm not worried about it. We're bouncing off of support. I feel like we're going to get rejected up at 80K, but I will keep you guys updated and let you guys know what's happening. But yeah, as you can see, we're still in a pullback range. So, don't get too bullish. Don't get too bearish because, we did just get stopped at the 75K support. So there's still buyers trying to keep this thing alive. So you got to be extremely careful since those buyers want to keep this thing alive. All right. So yeah, this is all I got for you guys today. Remember, I'm not a financial advisor. None of this is financial advice. Hit the like button, subscribe, all that good stuff. Check out the links in the description for Avantisfy, best DeFi trading out there. You can do up to 500x leverage. Use the link inside the description to get up to 5% off on it. And then also check out the link in the description for Chart Prime, best automated trading indicators in the game. All that good stuff. Hit the like button and subscribe. As always, I'll be back with another video.